Good morning, everyone. Today I'm going to be presenting the business structure of Karnataka Bank. Coming to the contents of the presentation, I'll be giving a company overview, evolution of the company, its market presence, regulatory and compliance challenges, the financial highlights, strategies, and the risks and opportunities. Coming to the general information or the overview of the company, Karnataka Bank is a Indian private bank based in Mangalore. It has been classified as an A class scheduled commercial bank. The bank is engaged in providing a wide range of banking and financial services involving retail, corporate banking, and para banking activities, in addition to treasury and foreign exchange businesses. The tagline of the bank is "Your Family Bank Across India." Now, coming to the revenue contribution of each of its segment, the retail banking has approximately 45% contribution to the revenue of the bank, followed by its treasury operations, which is 30%, and then corporate and wholesale banking with 20%. Later on, the other banking operations accounts for 5% of the revenue contribution. Coming to the mission statement of the bank, it says our mission is to be technology savvy, customer centric, progressive bank with a national presence driven by the highest standards of corporate governance and guided by sound ethical values. The vision statement says that the bank is to be progressive, prosperous, and well governed bank. Now, looking at how the bank has evolved over the years, the bank was incorporated in 1924 and was the first generation private sector bank. It now has 2,291 service outlets with 859 branches. The bank has been involved in digital loan underwriting and it has 12 million customers. Now, coming to the key milestones which has been there for the last 2 to 3 financial years, the bank has been able to maintain an outbound sales team. Followed by it has also launched customer relation management, which has helped the bank to enhance the customer engagement and improved its business efficiency. Thirdly, it has also been leveraging the customer 360, which is the bank strategy towards extensive analysis of how the customer wants their services and how the interaction should be conducted between the customers and the bank. Fourthly, the website development. The bank has developed a portal with 400 plus APIs. Lastly, the bank has also launched its mobile app, which is the KBL Mobile Plus, which has enhanced the customer engagement. It is very user friendly and has helped the customers to be able to navigate through the app more easily. Now, coming to the new products that the bank has launched lately. Firstly, there is the KBL Swarna Bandhu, which is a gold loan service the bank has enabled at the doorsteps of the customers. It came with the collaboration with Sahi Bandhu, a gold loan aggregator. Secondly, the bank has also launched a corporate salary account scheme, which has 3 variants of account schemes that they can open with the bank that could cater to their needs. Lastly, the bank has also started the collection of GST and has offered multiple modes including over-the-counter, OTC and internet banking. Now, coming to the market presence of the bank, as the name suggests, Karnataka Bank, it is a regional bank and has a very strong presence in Karnataka, Maharashtra, Goa, and Andhra Pradesh. As of June 2023, the bank had a network of over 900 branches and 5,000 ATMs spread across these states only. It caters to a diverse clientele, including individual, small, and medium-sized enterprises, corporates, and agricultural borrowers. Coming to the unique value proposition of the bank, it says it is basically empowering local prosperity through personalized services and deep understanding of South India's diverse needs with a focus on SMEs, agriculture, and financial inclusion. The bank has a lot of competitors in the public sector, in the private sector banking, and as well as in the regional bankings. In the private sector industry that the bank operates in, it has the major players which have a very deep position in the market, which is HDFC Bank and ICICI Bank. But the bank is able to stand out due to its strong focus in South India and its focus on SMEs, agriculture, and financial inclusion. However, the bank needs to address its limited geographical reach and profitability challenges to ensure long-term success. Coming to the regulatory and compliance challenges, the bank majorly faces capital adequacy. There is the maintaining of sufficient capital required by the RBI, so the bank has to be very regular in checking on these regulations. Secondly, NPAs, managing NPAs, particularly in the SME and agriculture sector that the Karnataka Bank majorly operates in, is a persistent concern. Thirdly, anti-money laundering, AML, and KYC norms. The bank has to be able to combat financial crimes and comply with regulations and complex with the costs that they occur. Fourthly, digital banking regulations. Keeping pace with evolving regulations around digital banking and emerging technologies can be challenging for the bank. Coming to the financial highlights, over the past 5 years, we have noticed that the CAGR of Karnataka Bank has been 6.8%, while the CAGR of the Indian private banking market has been ranging between 7 to 13%. So the reasons for the same can be the competition, as I have said earlier, that the industry that the bank operates in, which is in the Indian private banking, there are some major competitors like HDFC and ICICI. So to face such competitions, we can say that the CAGR has been a little less than the industry average. Secondly, the focus on specific segments. As the Karnataka Bank focuses majorly on the SMEs and agriculture sector, which possess a slower pace than the retail and corporate sector, so that can be the reason for a lesser CAGR. Secondly, while we look at the net interest margin, which is something like the interest income that the bank earns from its lending activities, while the interest expenses that the bank spends on its depositors. So as we see, the net interest margin of the bank has been increasing over the last 5 years, which is a very promising for the bank. Coming to the decreasing GNPAs and NNPAs of the bank, which promises a very positive sign for the bank, as the gross net performing assets and net performing assets of the company is decreasing, which promises improved financial health, as the bank will have more financial cushion to further extend loans and to have a more space for loan defaults, and it will have more lending capacity. It will have enhanced investor confidence, and also the bank has been seeing increase in their provision coverage, PCR percentage, which is very good, as it shows that the bank has been able to improve its credit rating, and it has reduced certain risks as well related to the credit. Now we can look at the strategy that the bank has been able to generate over the years, and it has the strategy to strengthen financial position to drive profitability. Starting with the current account and savings account percentage, the bank projects to increase its CASA percentage from 33 to 35% to generate a stable source of funding. It is also projecting to increase their cost of funds, which can also optimize the funding costs. Thirdly, they will be increasing their NNPAs from 1% to 1.5%, which comes with the enhancement in the asset quality. The net interest margin is also likely to increase from 3.5% to 3.7%, which will ensure there is consistent interest margins. The cost to income percent is also likely to increase from 47% to 49% to manage their operating expenses. Now coming to the ROA percentage, they will also be increasing their return on assets from 1.2% to 1.4%, so that they can have effective capital allocation. Coming to the risks and opportunities that the bank can have in the future, The risk that the bank certainly faces in the present also is their limited geographical reach. They have more concentration in the southern region, which hampers their potential growth in other regions. Second is their competition. They face heavy competition from the industry leaders. Thirdly, profitability challenges. Managing rising operational costs and non-performing assets (NPAs) in SME and agriculture sector is crucial for their future growth. Lastly, the technological disruption. Embracing fintech innovations and digital transformation is essential to be remain competitive in their field. The opportunities that the bank can ascertain in the future is digitization, expanding digital banking offerings, including mobile banking, online accounting, opening, and digital payments can improve customer experience and reach new segments. The bank can also increase their focus to more niche segments, like they already have in SMEs, agriculture, and financial inclusion, which can also help in capitalizing on their existing strengths. They can also go for partnerships and acquisitions. Lastly, they can go towards enhancing their risk management by particularly for their NPAs, which can boost their financial stability and investor confidence. Thank you. That was all from my side.